Welcome to the World Trending News For You channel. U.S. stock markets ended Thursday in mixed fashion as investors digested the latest round of tariffs from President Donald Trump, which officially took effect on dozens of countries. Despite concerns over potential economic damage, markets worldwide showed resilience, helped by optimism over potential interest rate cuts and robust corporate earnings. The S&P 500 slipped 0.1% after briefly approaching its all-time high earlier in the day. The Dow Jones Industrial Average fell 224 points, or 0.5%, while the Nasdaq Composite gained 0.3%, closing at a record high. Investors balanced worries about the long-term impact of tariffs with hopes that the Federal Reserve may soon lower interest rates to stimulate growth. The Bank of England also cut its main interest rate Thursday, underscoring global efforts to bolster sluggish economies. The newly implemented U.S. tariffs were lower than Trump's earlier threats, and some countries are still negotiating for better terms. However, uncertainty remains high, with analysts cautioning that Wall Street's rapid rebound since April has left stock valuations stretched. Tariff concerns weighed heavily on certain companies. Crocs plunged 29% despite beating quarterly profit estimates, warning that revenue could fall up to 11% in the current quarter as tariffs cut into margins. Lilly fell 14.1% after investors were unimpressed with trial results for a pill version of its weight loss drug, Zepbound. Intel dropped 3.1% after Trump publicly called for its CEO's resignation without offering evidence. In contrast, Apple provided a bright spot, climbing 3.2% on news it would invest an additional $100 billion in U.S. manufacturing over the next 4 years. Trump also announced a 100% tariff on imported computer chips, exempting those built in the United States, potentially benefiting large, cash-rich companies. Other corporate results were upbeat. DoorDash showed first days after topping profit expectations and expanding its customer base. Duolingo surged 10.7% after reporting a 46% year-over-year increase in subscription revenue. Abroad, markets in Europe and Asia largely gained. Hong Kong's Hang Seng Index rose 0.7%, and Shanghai's Composite gained 0.2%, following China's report of stronger exports in July. Japan's Nikkei 225 advanced 0.6%, with Toyota sliding on lowered earnings forecasts due to tariffs, while Sony gained as its tariff impact was less severe than feared. In the U.S. bond market, the 10-year Treasury yield inched up to 4.23% from 4.22% after mixed economic data. Weekly jobless claims showed a slight increase in unemployment applications, hinting at possible layoffs, but still within normal ranges. Productivity growth exceeded forecasts, potentially easing inflation pressures, even as tariffs raise prices on a wide range of goods. For now, Wall Street's message seems to be, tariffs may bite, but earnings and central banks still have the power to soothe. That's all for now from World Trending News For You. Don't forget to like, share, and subscribe to the channel.